welcome to another episode of Always Up to Date. I'm Denise and this is Yahweh. Today we're going to be talking about what to claim on your personal taxes if you're a proprietorship. So as you know, we usually start our episodes with a quote and a statistic and a little story. So our quote today is from Michael Gerber, who's the author of the book, The E-Myth. And his quote is, "What makes people work is an idea worth working for, along with a clear understanding of what needs to be done." So the statistic that we have is from the Fraser Institute. And it says the average Canadian pays 43% of income in taxes. That's the tax, CPP, EI, GST, fuel tax, etc. And by comparison, on average, only 37% of the remaining income goes towards basic necessities such as shelter, food, and clothing. So we have clients that receive T4s, T4As, and no tax has been deducted on them. And so now you have to pay the tax in the full amount when you file your personal taxes. So I'm just going to ask a few questions to Yahweh, and we're going to try to answer them the best that we can. So Yahweh, who can be a proprietor?
So anyone really that has any business income. I don't know if there's a age restriction, probably over 18, but really if you have an income that's not a regular employment, that would be your business income. Yeah.
Right.
Or even that T4A by default, you become a proprietorship just because you have professional fees or business income that you've earned that for service that you've provided others. So just be careful when somebody issues you a T4A. It's not necessarily an employment income. It could be a business income, and you can deduct some expenses out of it as well to kind of lower it down.
Yeah. That's right. And a proprietor is somebody that's not incorporated yet,
exactly,
right?
Yeah.
So so that brings me to my next question. What's the difference between a proprietorship and a corporation?
So a proprietorship is an unincorporated business. So it means that even if you registered your company or the name of the company with the registry, it doesn't necessarily mean that you're a corporation. Corporation would usually have prefixes like limited or Inc. or enterprises. So the main difference between a proprietorship and a corporation, proprietorship is part of your personal business or your personal tax, as opposed to a corporation when it's an actual separate entity. So for income tax purposes, a corporation is a separate individual or a person. A corporation can be addressed as a person in corporate income tax act. So those are the main things that you have for proprietorship and a corporation. In a corporation, some of your personal assets are not really at risk of being, let's say, tied to a loan that you took under a corporation. It gives you what we call a corporate veil that would give you the limit of what they can claim, especially if you're not a director of the corporation. So I think those are the common differences between a proprietorship and a corporation.
Right.
Yeah.
Yeah. And so what type of income do you need to have to be considered a proprietorship?
Business income, professional income that's not resulting from employment. So I know sometimes for cleaning business, like you would come in and somebody would give you an income or would pay you or hire you to do a service, and they would provide you a T4A. So by then you would have been an unincorporated business, and you are a proprietorship. And this is the same with contractors for, let's say, a dance studio. Then if you're not employed by the corporation, you are technically you're operating under a proprietorship. Yeah, I think sometimes farms too, like if they have little hobby farms or something that not big enough to incorporate, but
just that little bit of income from, maybe you sell eggs or
Yeah.
something, maybe. Yeah.
Yeah.
So, Yahweh, do you need to collect GST as a proprietor?
I believe you will have to collect GST once you start earning $30,000 or more. Right. So it is, you have to register for a GST number when you're at that level of income or your proprietorship is earning that much, then you have to register for GST.
Right.
Yeah.
Right. You can register before 30,000 if you choose
can,
to,
yes.
but you are required to at 30,000.
Yes,
right?
Absolutely.
Yeah.
Yeah.
So, are the deadlines for filing your personal taxes different when you're a proprietorship?
Yes. So normally, if you're incorporated, you would have 6 months after your fiscal year to do your taxes and 3 months to file your GST. With personal tax, with your proprietorship, since you're reporting your business activities under your personal tax, you have until June 15th to file your personal taxes with your business activities on it, as well as your GST. So you have 6 months and 15 days if you may, for you to file your taxes. But be aware that since you are a personal tax filer, your personal income tax owing still has to be paid on April 30th. So even if you file on June 15th, you would have had to pay all of those on April 30th. So it's very important that you do installments just to avoid any penalties or interest on that.
Yeah. And just as an interesting note, if you're a proprietor, your spouse or partner can also leave their taxes until the 15th of June.
Yeah.
They don't have to file the April 30th deadline, and you can file together in June.
Yeah, absolutely.
Yeah.
And be mindful of that too, because now that you have a spouse, there is a way that you can split income. So if your spouse is helping you, even if it's just bookkeeping or the back end admin or anything like that, you can split this income, especially if your spouse is still under a lower income tax bracket. So there is an opportunity to split tax that way.
Yeah. Right. So what types of expenses can you claim as a proprietor?
So as a proprietor, there is some expenses that you can claim that are a little bit limited depending on the business portions that you do. Normally for corporations, you can claim your rent, your meals and entertainment, your travel, your interest. Those can be deducted on proprietorship as well, but there are some limitations. For example, for travel, you have to make sure that you're only reporting the business portion of your travel to your business income or financial statements, or your T2125, if you may. Stuff like your rent for home. You have to declare a certain percentage of your home as your home office, and that portion is the only portion that you can deduct under your business. So those are the stuff that you want to think about when you're thinking about expenses that you can deduct for your business income under a proprietorship.
And I think when you're doing your taxes, it'll ask you for the square footage of your home, and then the square footage of the area you use for your office, and then you kind of prorate it to that. So you can't claim the whole amount of your utility bills or your heat or your property taxes and that kind of thing. Yeah. So you talked about mileage. How do you track mileage?
Mileage is very important to track, because if you get audited on it, they will ask on these details. So if you're tracking mileage, make sure you put in the date of when you traveled, where you're coming from, where you're going to, and the purpose of your travel, and the amount of kilometers or miles that you that you travel. So those are the stuff that you want to keep track when you're doing mileage.
Yeah.
And again, it has to be business related.
Right.
It doesn't, I think Denise talked about it in our other video, where simply just going to your office, if it's a separate location, isn't necessarily a business mileage.
Right.
Because the reason for that is that if you would have been employed, you would have had to take that, and you would have had to take the same trip, and you wouldn't have had to be able to claim that under your employment income.
That's right.
So be mindful of that when you're tracking your mileage. If you're going somewhere else before going home, let's say you're going to the bank to deposit from your office, that could be considered mileage.
Right.
Traveling to your clients, that's not necessarily a daily routine, that could be a mileage. So stuff like that you have to be mindful of when you're keeping track of your mileage.
Yeah, exactly. So what types of personal expenses can you allocate to the proprietorship?
So I think we talked about it a little bit. Your home office expenses. So it's mostly your property tax, your condo fees, your mortgage interest, just the interest, not the principal.
Right.
Your heat and electricity, your utilities. So those are some of the items that you might be able to put a business portion to your business as expenses. And be mindful, because your home office can only be deducted as far as how much your income is. It can create a loss.
Right.
So be mindful about that when you're deducting office expenses or home office expenses into your business. And again, it has to be based on the percentage of your office area in your home. Yeah.
Right. So Yahweh, can you claim CCA?
Yeah, you can claim CCA. So you're allowed to deduct some motor vehicle expenses. So if you're using your vehicle mostly for business purposes, definitely you can claim CCA. But again, it's limited to the business portion of how much you drive for as opposed to your personal kilometers that you've incurred using the same vehicle. So you can claim CCA on that. And also if you own equipment, definitely you can claim CCA on your proprietorship. Again, business activities would have been the same, would have been treated the same way as you would treat a corporation, because they're the same business income. So yeah, you can claim CCA.
Okay. And what type of losses can you apply to your income?
So I've talked about the home office losses before. You can claim a loss with that. But if you do end up getting a loss from your business, it's called non-capital loss. This can be applied to any of your income. And if you don't, you can carry this back 3 years, and you can carry it forward as well. Most of the time you want to carry it back, because if you've earned income before, you already know that you can get a refund from claiming those losses and get it applied to previous losses that you have before. So those are the type of losses that you can apply to your income.
Great. So we kind of talked about the difference between a proprietorship and a corporation. So my next question is, when do you know to move from a proprietorship to a corporation?
This one's tricky. The main or the most common level that they want you to move from a proprietorship to a corporation is when you're earning $50,000 or more. The math works where being incorporate or being reporting your proprietorship under your personal tax, and doesn't make sense anymore for tax purposes, because in that way you'd be getting taxed more as opposed if you have to corporation if you're incorporated, and that's including the cost that you would have to incorporate and the cost that you would have to incur if you're incorporated due to filing, because in a proprietorship, you only have your personal tax plus your GST or your payroll most of the time. Now you have a corporation which is separate from you, which is also could be claiming GST, payroll, and its own corporate account, which is federal and provincial corporate taxes.
Right.
So those are one of the things that you want to think of. Also, if you're worried about your registered name, corporation kind of protects you for that, having ownership of the name of your corporation, because not only if you're operating under a proprietorship and you've been using the same name and you've built a great reputation, somebody else can take that name just by incorporating it. So that's one consideration as well. And again, your liabilities, if your your proprietorship is taking on too much risk, and your personal assets are getting tied to those risks, maybe it's time for you to incorporate, to kind of protect yourself from those risks that you're making in the business.
Yeah. Good.
Yeah, so I think that's all the questions
That's all the questions, right?
Yeah, so feel free to comment and ask any questions on our comment page below. Please like and subscribe if you find this video informative, and we'll see you guys next time on our next episode, and always up to date.